Good morning, everyone. I'm Vince Lancy, and this is the market rundown. The topic today is China. China bought the December gold dip. Yesterday, Bloomberg mentioned, in dismissive fashion, I might add, that China bought over 11 tons of gold through the PBOC last month. We determined that their buying was between 25.80 and 26.20, and we'll get into why we think that in a minute. But let's cover that story because it is a news story. Before we do that, let's start with the markets. 10-year yields are 4.72, up 4. The dollar is 109.30, up 62. The S&P 500 is 58.83, down 27. The VIX is 1946, up 163. Gold is 26.48, straddling unchanged. It was stronger overnight. Silver, $30, spot 03, up a penny, also straddling unchanged. That was up about 20 cents overnight. WTI, 29, up 29, 74.98. That was up. So basically your commodities are coming off the highs of the evening. Natural gas, 365, up 15, defying all that stuff. Bitcoin, 94,775, down 2,000. Slammed yesterday from 102 down to 95, I think. Ethereum, 33.40, down 36. Palladium, 926. Platinum, 954, down 1, up 5, almost, respectively. Soy, corn, wheat, 995, 448, and 546 and change, up 1, unchanged offered, and down 2.5. Pistachios are unchanged, probably higher. Okay. It just occurred to me to talk about the stock market up front after looking at that. The market is starting to, the stock market, right? And this will affect gold as well, is starting to reiterate a behavior that it had in 2013 and 2018. Now, 2013 was something called the taper tantrum, where the stock market would throw a hissy fit every time it was implied that the Fed would reduce or taper quantitative easing. In 2018, the term came back again, taper tantrum, but it wasn't specifically on the QE tapering. It was just basically on rates going up and things related to that. It was a nice catchphrase. But anyway, the point of the tantrum is the word tantrum, and the market is starting to, the stock market I'm referring to, is starting to act like every time somebody opens their mouth, specifically Trump mostly, and says something that is potentially going to pull the rug out on assets, stocks, and homes. Whenever terminology comes out describing that, the stock market is taking a hit. So the stock market is throwing a tantrum every time some official, usually Trump, says something that reflects a rug pull potential. So the examples this time are, I'm serious about reducing a deficit. Boom, stocks are dropping. Because for him to say that is to say there's going to be less leverage. There's going to be less spending, right? So I'll give you the 3 scenarios that govern a reduction in the deficit. Number 1, you fire government workers, okay? So you reduce government employment. That makes the unemployment rate go up. That's, believe it or not, in our country, that's bearish for stocks. In Argentina, it's good because they just had so many people on the dole over there. And our country, while it's not something that we're proud of lately, it's certainly not Argentina. So that's the first way. The second way to reduce the deficit is to stop spending. And what happens if we stop spending? Well, there's less money. If there's less money, then stocks say, oh no, there's liquidity problems, and stocks drop. And the third way is, there is a third way, isn't there? Hold on, let me think about this for a second. The third way is it's all related, right? But the third way would be he backs off on the tax cuts, right? He backs off on tariff, or he doesn't back off on tariffs. And when those three things are hit the market, you see the stock market kind of wobble a little bit. I mean, it's at all-time highs, right? And you saw gold wobble one or two times as well, but that doesn't seem to be happening now. Now, I'm going to tie all that together with something that Trump said yesterday. Yesterday, in an interview, Trump specifically said, it was yesterday, I believe, interest rates are too high, basically an attack on the Fed. Now, that's what I just described to you in combination with what he just said is the totality of his policy, right? That is, I want to reduce the deficit, right, by ultimately spending less, right? Not up front. He's not going to spend less. Tariffs are not inflationary. They're not really that inflationary. All right. Ultimately, to counterbalance the reduction in spending, you need to lower rates. So look at it this way: it's volume of money, which will be decreased in the economy, and then you lower rates, you increase the velocity. That's all monetary and fiscal policy are: volume and velocity, right? Money supply, money velocity. That's really the concept there. So a corporatist, or Trump specifically, I should say, it's corporatist, but it's Trump. I'm going to reduce the deficit and I'm going to increase the velocity of money. He wants Powell to lower rates. So here's where your conflicts start. Trump, Powell. And, Trump's not going to replace Powell. And Powell's probably not going to quit. It'll look like he's resigning before he gets to 2%. But the Trump, Powell, for Trump to reduce the deficit, he needs Powell to lower rates. There you go. That's it. There's your soundbite. But I want you to pay attention to that if you have money in the stock market, and who doesn't. Okay. And how gold reacts to it. So, for example, coming back to gold, stocks are down 15 handles right now, right? Gold is up $2. The dollar is up. Gold is up $2, right? Bonds are down. Gold is up $2, right? So your correlations are getting distorted again because of this potential taper tantrum. It's a tantrum. Taper on spending, right? Think of it that way. All right, let's get to the main story. I've taken up enough time there. There's the front page. China's central bank adds over 11 tons to gold reserves in December. We sent that out to subscribers about a half an hour ago, and there's a couple other stories there that are all very relevant. Tuesday PM has all of our stories in there. All right, getting to it. Discussion: China bought the gold dip. PBOC doubles its November public purchases. This is us reporting. The People's Bank of China, PBOC, reported an increase in its bullion reserves to 2279.63 tons in December, up from 2268.58 tons in November, metric tons, according to data released Tuesday and according to Bloomberg. China's central bank expanded its gold holdings for the second consecutive month in December, signaling their continued commitment to de-dollarization despite gold prices being higher by over 25% in 2024. And there's the story. We have that story for you. And there's a chart that is not a Bloomberg chart, a little bit of an homage to Bloomberg. China increases its gold reserves again in December, publicly discloses 5 tons in November, followed by 11 tons in December. We've updated a chart there. Now, keep in mind, very important, it's another story that we have. Very important that in November they bought 5 tons publicly, and they bought 55 tons reportedly by Goldman Sachs OTC, and Zero Hedge alerted us to that. That ratio is phenomenal when you think about it. Anyway, so this month they bought 11 tons. Did they buy 110 tons? I don't know, but if they did, then gold could rocket. If they didn't, then you want to watch gold. If it dips, you probably don't want to buy the dip. Anyway, that's just a trader talking, okay? So there's the chart. There's the reality of it. And we're kind of back on the slope. If you're a trader, we're back on the slope, folks, and it's interesting. It's interesting because the low in gold for December was 2580 at spot. We're not talking about 1500, 1800 gold anymore. They're buying 25, 2,600 gold. Okay. ING also covered it this morning. We have that. The ING commodities feed China adds to gold reserves. Here's their comment on it. China's central bank added to its gold reserves for a second month of December. China gold held by the People's Bank of China rose to 73.29 million troy ounces in December from 72.96 million in the previous month. The central bank resumed adding to its gold reserves in November after a 6-month pause. The purchase by the central bank comes even with gold prices near record levels. That's right. Another comment about ING, they're not going to give you the insightful, at least in gold, insightful commentary that you're going to get from, bullion banks or here. But they're getting very good at reporting stuff before everyone else. Like if they were a news agency for commodities, they'd be better than pretty much everyone else out there. All right. We have that report at the bottom. Both articles are at the bottom. Moving on. News and analysis. There's a story we just discussed. Tuesday Founders AM that went out yesterday. Gold and silver's next 6 months. That was related to interest rate differentials. And by the way, well, not by the way, it's become public that Goldman Sachs has lowered their rate expectations for Fed cuts in 2025. So you know what happens next. Tuesday PM, there you have it. All right, so there's our stories. Market news, Mark Zuckerberg built up Facebook's content policing efforts in the wake of Donald Trump's first presidential election. Now the Meta chief executive is reversing course as he embraces a second Trump presidency. Meta is ending fact-checking and removing restrictions on speech across Facebook and Instagram, Zuckerberg said in a video Tuesday, a move he described as an attempt to restore free expression on its platforms. Wall Street Journal fails to mention, at least in their intro, that he publicly acknowledged, it's ironic, right? Publicly acknowledged that he's going to move towards a more community-based self-policing. A lot of my friends, a lot of my colleagues will look at what Zuckerberg's doing and say he's a worm, right? He sucked up to the president before, and now all of a sudden, he's doing what he has to do to survive. And you'll say, he has no morality. And I'll say to you, be careful. He's a capitalist. That's what a capitalist does. I mean, he's a lizard, right? But he's a capitalist. He never believed in the ideology of the Biden administration, right? He never believed that he didn't care if Trump would be good or bad, but he tried to prevent Trump from becoming reelected pretty successfully, actually, when you think about it. And that's because he's sticking with his wallet, not with his morality. Okay, so he kissed Trump's ring about a month ago when he visited him, and now he's kissing Elon's ring because he knows what side his bread is buttered on. So that's how it works. There's the rest of the stories. Moving on. Today, Fed Open Market Committee meeting. Oh, by the way, Zuckerberg's a worm, as far as I'm concerned. Fed meeting today, the minutes of that meeting are going to be released, and it will have an effect on the market somewhat, although I'm not really sure what to look for yet. I have to look for that. All right, and there's the premium. China's central bank adds over 11 tons to gold reserves in December. China bought the December gold dip. Let's go to a chart. I'll give you an idea what I'm talking about. Here's gold, right? There's the month of December. Let's stretch it out. And there's December. There's December. Well, there's November. We know they bought in November. They told us. And there's December. The low in December is 25.83. So the lowest price they bought in December is 25.83. The lowest. Okay. That's a long way from we're just hedging. You're not hedging dollar risk if the dollar is getting stronger and you're buying gold at 25.83. You're hedging your future economy. Okay, So here's something I want to spell out a little bit more. This is November 14th post-election. That's the bottom in gold at the 100-day moving average. This is December 18th, the low in gold. That's the bottom in gold. And although it's not strictly at the 100-day moving average, these are ranges, right? The next day it's sold again and it's bought again. The next day it's over. So I had been speculating, and one more time, I had been speculating over the last month that I was just retrace this as a technical short-term trader. I was surprised that gold held the 100-day moving average, given that silver cracked it and gold held it. And I said, well, either China's buying there or macro discretionary is buying, and I wasn't sure. And then it went through it again and it bought it again. And I said, all right, there it goes again. And now silver's above the 200-day again. And I'm like, all right, this is really good. Silver should run, gold should run. And now here we are, hugging the 100-day, and China's been buying. China's buying here, right? I mean, they could be buying there. I don't know. Is that more bullish or less bullish? I don't know. But China's using the 100-day moving average currently, or maybe it's just this price area between 2550 and 2600 to buy gold, to de-dollarize, to hedge its treasury exposure. Gold is a hedge for treasury exposure now. So the question now remains, as a trader, is China buying, let me stretch this out. How do I do that? Here we go. Is China buying the 100-day moving average, or is China buying in a price range? Now, the 100-day moving average is a great line to use if you're trying to figure that out. I would now suggest that China is a buyer between 2550 and 2600, depending on the liquidity they can get. If there's 5,000 contracts on the offer, the phone rings and they go, okay, buy them, right? If there's 50 contracts on the offer and the phone rings, they go, not enough. That's how you handle size in markets like this. So although the 100-day moving average is a anchor that the market is tethered to right now, I would say look at it as a moving average, which is what it is, and then add and subtract, say, 2 standard deviations above and below it, and you get an idea of where the cap and floor are in gold. So the 50-day moving average, right, sloping down, normally that crosses, that's bearish. It's bearish for gold. It could be bearish for gold. I'm not saying it's not, but if that turns up, you'll have China buying at the 100-day moving average. Then you'll have macro discretionary buying at the 50-day moving average. And then you'll have the lemmings buying at new all-time highs. And that's how it should go. Silver, those of you who know, I'm actually short gold now and long silver. And I made money yesterday. We'll see how that goes. See if I tell you when I lose money. Like right now, I think I'm losing money. But there you go. We're above the 200-day moving average. There still is selling lingering above here. They're still keeping a lid on silver. I mean, they're still doing it. But the CTAs are now short silver, I'd say moderate to heavy, not extreme. Copper, they're heavy, and gold, they're very light on their length. So look for silver in this area. Look for the silver to not break 2870. And keep in mind Michael Oliver's levels, that if we close above it in March futures, the market should have room to run. I think we're going to the 100-day moving average. I'm not sure of that. In gold, I'm pretty sure we're going to the 50-day moving average. Why am I sure of that? Well, because there's no width left in it. So we'll see what to follow next week after this. All right. I'm Vince. Have a great day. Talk to you tomorrow.